Since January 1st of this year, we've seen the Nasdaq lower its requirements for a technocratic founder that cashed in billions from forced buying by unsuspecting investors. Tens of millions of dollars in oil options trading closed mere minutes before the U.S. started bombing Iran, a U.S. Congress that has actively engaged in insider trading, a sitting president that has issued 15 pardons to people convicted of various crimes of corruption, and an investment bank putting an $800 share price target on a company it helped take public, all to curry favor with the billionaire founder and private equity investors. Corruption has existed since the dawn of mankind, but it's usually perpetrated in the shadows, in the dark corners of our institutions most people will never see. But now, we're witnessing a level of brazen, public, and even boastful corruption we haven't seen since the Gilded Age, and it's changing the very foundations of how our financial, regulatory, and legislative systems operate. Welcome to the new economy of corruption. Let me try and define corruption right off the jump. While you'll mostly see definitions that associate corruption with illegality, that's not the whole definition. Merriam-Webster defines it as, quote, dishonest or illegal behavior, especially by powerful people. Note the use of the word or. For this episode, I'm defining corruption as economic, regulatory, or legislative activity that benefits those with influence, access, or the ability to manipulate rules. Corruption certainly lives on a spectrum, from gray areas like exploring regulatory loopholes, rule changes, and financial engineering, to hardcore corruption like insider trading, market manipulation, or pay-for-play schemes. All of this, however you want to define or categorize it, has started to play an outsized role in the way our markets, economy, and even government work. This corruption, in its many flavors, puts the figurative thumb on the scale, which in turn leads people to distrust the very foundations of our economy. Now, there's an interconnected system that makes this all possible. First is incentive misalignment. This is something I've talked about before on the channel. Most behaviors can be tied back to incentives. Whatever is rewarded gets amplified. In public markets, executives are rewarded for high stock prices, not the underlying business fundamentals or reputable corporate governance. Politicians are rewarded for favorable corporate treatment with cushy post-political careers. Ever wonder why there are so many former elected officials named to boards of directors at hedge funds, defense contractors, or banks, despite having zero industry experience? Regulators are often rewarded for keeping markets calm, not for holding them accountable. If doing nothing creates a perception that nothing is going wrong, they must be doing a great job, right? The second is engineered complexity that shields perps from detection or enforcement. Just look at how complicated corporate governance can be. Delaware C Corp governance looks almost nothing like any other state, and that's by design. It was co-engineered by the corporations that file as Delaware entities because of those favorable regulations. What's worse, if Mark Zuckerberg decides he doesn't like certain investor protections built into the rules, he threatens to reincorporate elsewhere and forces Delaware into rewriting its regulations in a way that makes it harder for shareholders to challenge powerful insiders. Yeah, that actually happened. Third, the fox gets to guard the henhouse. David Sachs is the president's AI czar and is in Trump's ear about everything related to AI, specifically everything related to AI regulations. Sachs is also a major AI investor. Not surprisingly, he's not in favor of any regulations, believing those just slow growth in the industry. Sachs is just the latest example of this. Big industries have always been given a seat at the table, influencing regulations and even helping to write some of them, always in their favor. This creates this fox guarding the henhouse, or a closed loop where industry influences regulation, regulation strengthens incumbents, and incumbents therefore gain more influence. Rinse and repeat. All the while, the regulators at the SEC, FTC, CFPB, and any other acronym you want to throw in there are slow rolling or ignoring their responsibilities. Those that have stood up to raise their concerns or even mount an investigation seem to suddenly quit or be pushed out of the SEC or DOJ. Early estimates show the SEC filed 30% fewer enforcement actions in 2025 when compared to 2024. The FTC only filed 18 merger enforcement actions in 2025 compared to 32 in 2024. In case you don't know, the FTC is the regulator that investigates antitrust or monopolistic business mergers and practices. Case in point, Warner Brothers and Paramount, a deal that has received nearly zero regulatory scrutiny. You know, one of the best ways to support small YouTube channels like mine is to subscribe. If you like the content and you'd like to see more of it, consider subscribing. Back to the episode. And then there's the Department of Justice. In simplest terms, the DOJ is supposed to be the people's lawyer. Regulators like the FTC and SEC can start investigations and refer cases for consideration, but anything that results in filing charges is under the purview of the DOJ, at least at the federal level. According to reporting aggregated by ProPublica, during the Trump presidency, the DOJ has already dropped more than 23,000 criminal investigations, and over 60 union corruption and labor racketeering cases were also shut down. So if corruption is increasing in prevalence while regulators sit on the sidelines and the DOJ's selective prosecution results in more than 23,000 dropped criminal cases, it's hard to argue this behavior and the mechanization of corruption isn't now a defining feature of our economy. The depth of this ethical and legal rot would have historically been associated with banana republics, not the United States. Now, it feels like it's slowly taking over our institutions like kudzu on an old oak tree. It's easy to get upset about this from a philosophical or intellectual point of view. This is wrong and it shouldn't be allowed. That's obvious. But what gets lost beyond the headlines is how this corruption actually impacts our markets, our institutions, and the average American. So let me illustrate a few examples of what I'm talking about. I briefly mentioned SpaceX fast track for inclusion in the Nasdaq 100. SpaceX was also allowed to tender fewer shares for their IPO than is traditionally required. Once a stock is included in the Nasdaq 100, every Nasdaq 100 ETF is forced to buy that stock commensurate with what's calculated as its relative weight in the index. Previously, only companies that had been listed for at least 12 months and have demonstrated a stable, if not growing, share price are included in the Nasdaq 100. The limited number of shares SpaceX was allowed to float made the stock overweighted in the index, which means those ETFs were forced to buy more SpaceX shares because of the imbalanced weight that float waiver created. Now stay with me. If all of that sounds like too much financial gibberish, here's the punchline. Roughly $50 billion of SpaceX stock were purchased through this forced buying by ETFs at a valuation that has now dropped as much as 30% since being purchased. Tens of millions of Americans have some NASDAQ ETF exposure in their investment portfolios and retirement accounts. Ultimately, all of them now own some portion of SpaceX stock at a share price that has plummeted since it was purchased. The Trump family launched a cryptocurrency stablecoin called USD1 through its World Liberty Financial business. A stablecoin is supposed to be stable in its value, so $1 worth of stablecoin is always equal to $1 US. If you're asking what's the point of doing that, really couldn't tell you other than it allows you to move money around without much oversight. That probably sounds like money laundering to most people, but I digress. An Abu Dhabi investment group placed a $2 billion investment in a company called Binance in early 2025, which was then swapped for USD1 stablecoins sometime in the spring of 2025, effectively providing Trump's World Liberty Financial with $2 billion in stablecoin sales. Meanwhile, the founder of Binance, Changpeng Zhao, also known as CZ, was seeking a pardon from President Trump after being convicted of money laundering while running Binance. Binance, under CZ's leadership, let people trade on an offshore, unregistered platform with weak safeguards. And that platform was also moving illicit and sanctioned money. Binance users, many of them Americans, were effectively financing this money laundering operation. Guess who got a pardon in October of 2025? CZ, a convicted criminal, was able to curry favor through financial means with the one person that could provide his freedom. And if this was all perfectly legal or ethical, why did President Trump claim in his interview on CBS he didn't know who Zhao was, despite having already pardoned him? And make no mistake, this corruption is definitely bipartisan. According to Open Secrets, between 2008 and 2018, there were 10 members of Congress whose net worth exploded between 970% and an unbelievable 11,000%. This list includes 6 Democrats and 4 Republicans. It's been well documented that Nancy Pelosi, through her husband, was one of the most active securities traders in Congress. And she was conspicuously good at it, too. According to Yahoo Finance, her portfolio beat the S&P 500 returns by 559 percentage points over roughly a decade. By comparison, Berkshire Hathaway and Warren Buffett, the gold standards of successful investors, didn't beat the S&P returns over that same period of time. So are Nancy and Paul Pelosi trading on insider information, or are they just the greatest market speculators of all time? I know which one I think is more likely. The House of Representatives just passed the Stop Insider Trading Act to the Senate for a vote. While that sounds like progress, keep in mind the president is excluded from these restrictions, and congressional members are only prevented from buying individual company shares, not index funds or other bundled products. Theoretically, they could still get an investment bank to put a small basket of stocks together and create a loophole. Let's say a defense contractor fund with Northrop Grumman, Boeing, and Palantir that gets created and offered right before we decide to bomb another country. There are also no restrictions on selling individual shares, so if things are about to go bad for a sector, insider information could still be used to sell those shares before that information is made public. In essence, this is half a solution and puts zero restrictions on the president. If anything, it signals the president can do whatever he wants. So the Pelosi's got rich. What's wrong with that? Nothing, as long as it was all above board. But public markets are supposed to function with information symmetry. Every investor should have the same access to information in order to make decisions regarding their own trading behavior. When elected officials trade on information that only their security clearances and access provide, information that isn't available to the general public, then there's an asymmetry of information, and that can have a significant impact on individual stocks or an entire index. Imagine it's 2019 and your senator just bought stock in Pfizer just before they announced their intention to deliver the COVID vaccine to hundreds of millions of people. Or maybe they placed $1 million in futures options on Brent crude oil right before Iran started getting bombed and closed the Strait of Hormuz. Martha Stewart sold roughly $220,000 worth of stock to avoid a $40,000 loss and went to jail for 5 months for insider trading. Nancy Pelosi's net worth increased by $74 million during her tenure as an elected official, a 280% growth rate in 16 years. Let that sink in for a second. Martha Stewart sold about $220,000 worth of stock on a tip and did 5 months in federal prison for it. Nancy Pelosi's net worth grew by $74 million while she held public office, and not a single charge, not even a single investigation. One of these people made caramel fly while serving time in Danbury. The other one still has her security clearance. The backroom deal, the brown paper bag full of cash, that stuff needed secrecy to survive. This new flavor of corruption doesn't. This corruption survives because it's boring, because it's technical, because it hides behind terms like float waivers and stablecoin liquidity and portfolio rebalancing, words designed to make your eyes glaze over before you simply scroll past the story. And that's a good place to start. Read past the headline. When a felon gets a pardon, ask what they or the people around them paid to get it. When a company gets fast-tracked into an index that forces millions of Americans to buy its stock, whether they want it or not, ask who signed off and why. The answers are usually sitting right there in the filing, the disclosure, the public record. This kind of corruption doesn't need secrecy anymore. It just needs you to not ask any questions. The second part is accountability. And I don't mean waiting on the DOJ because we know they won't be bothered. Do you pull out of ETFs to show your dissatisfaction with forced complicity? Do you stop using platforms like Binance or refuse to buy stablecoins from Eric Trump to avoid encouraging pay-for-play copycats? Do you actually read the financial disclosures of your own elected officials and make sure that aligns with your own values and expectations of the office? Markets, courts, elections. None of this works long-term if people stop believing the game is fair. And once enough people decide the whole thing is rigged, they don't just get angry, they also stop playing by the rules. After that layer of trust has evaporated, we're going to find out trust was the last remaining structure holding this whole thing together. That's it for this episode. As always, like, comment, and subscribe, and we'll see you next time.